you might get started stuck in this is what we have left, and maybe you're gonna put all the chips now, and maybe you're wrong, or you're right. You don't know. That's the thing. You always think of you don't know. That's what I would like to think about. Like I don't know. So if I don't know, then anything could happen. You know what I mean?
Mm. I mean, I've heard it all recently. There's not going to be a bull run. It'll be the biggest bull run ever. There's not going
Yep.
to be a bear market anymore. We're going to be in a bear market for 10 years. The cycle's going to extend by 3 years. You know, every cycle will be it's like, wow, that's a lot of this and a lot of that and a lot of
Of
this and a lot
course.
of that. But I mean, there's diminishing returns, risk to reward with Bitcoin at this stage in the market. I feel like Bitcoin is becoming a less attractive investment for me at this point because I'm thinking,
Mm-hmm.
how much do I need to risk and what's the likely return? And if we compare that to say 18 months ago, the risk to reward
Mm.
on Bitcoin was a hell of a lot better than what it is today, which makes me start to look more towards the alts, but they
Mm-hmm.
feel massively undervalued at the moment, just massively undervalued. But we're not seemingly getting that the rising tide lifts all boats. We're getting sectors that are firing off, sectors
Mm-hmm.
uh, that are hot. And of course, we don't know. We don't know whether that will continue like that or whether we will get that everything just goes completely crazy or not. It's an odd period right now. It's a weird kind of period.
Mm.
It's that I suppose it's that wanting to shake you out of the market, because you wake up in the morning and you think, oh, this is shit. I hate this. I just want to go home, and you get to that kind of, I'm pissed off with all this. It's not doing what I thought it would do. Or as I remember Scott saying that bull markets can give you that feeling that you've wasted like it's all wasted effort. Like they can make you feel like that before they do something. They can be like, well, we fucked this, we've gambled on this for the last couple of years and we've fucked it all up. And then
Mm-hmm.
we get some kind of liquidity input or whatnot.
Anything, yeah, and you're right, like that's a valid point, you know what I mean, in terms of that perspective, risk reward. Um, it's a tough one for me because obviously risk reward depends on what, like, there's a few things that you mentioned that there is always this game on crypto, like what's undervalued, right? What does that mean? Like, how do you know if it's undervalued? How do you know Ina is overvalued or overvalued? How do you know Pengu is fucking undervalued? You know what I mean? I'm serious. That's kind of the way it is, And look at Pengu, man. Like, look at
Yeah,
that
look at
thing.
Pengu. I sold my airdrop. I was like, what is it?
So it's one of those games that is hard to play in terms of what value is. Definitely. I don't, because you think about it, in my perspective, and this is only my perspective, by the way, value is given by people. Value is given by what people are willing to pay for an asset. I always keep saying that and I always keep it on the side of my head, right? Like, so I don't get attached into. There's definitely, from the technical perspective, a lot of risk reward that you can actually measure in the chart and say, all right, we have previous all-time highs, we have previous things like this, like that. But um, that becomes irrelevant if people are not willing to buy at those levels, period.
Mm,
Or if you think about it from Bitcoin perspective, right? If you have a lot of people that think that 120,000 is cheap for Bitcoin, then you're going to have a crazy run on Bitcoin probably to 150, 300, 500. Who the fuck knows? You know what I mean? Like, no one knows. So I always keep it now. I try. It's not easy because obviously you become emotional. You have positions in the market. You have biases. You have hypotheses on things that it could not happen. So it's pretty tough to isolate that value to what you're seeing on the price action. So that's why price action is so important. You know, at the end of the day, price action will tell you pretty much what is the reaction at certain levels, what's the reaction at a value level sort of deal. You know, what, and thinking from that perspective, what everybody's willing to pay for an asset. And if you're right, then that's the asset, that's the price. As simple as that. You know what I mean? Like it's an auction, thinking from that perspective. Yeah. I mean, you've been in an auction, the price keeps going up until someone stops bidding on it. You know what I mean? Like if no one bids on it, like there's no value. There's no intrinsic value. So where is crypto value comes from? Comes from, you know, the narratives, Twitter, pumps, you know what I mean? What's hot, that's why you're right in terms of the narratives. And that's why I build the sectors. And there is how you can actually see the sectors sort of playing along. It could be manipulation, you know what I mean? It could be people that actually go into one sector at once, bank some profit, then pumps the other sector, then you know what I mean? That could happen, right? Anything is doable in the market. So I like to always keep it in the back of my head, like where is everybody willing to buy? You know what I mean? Like if they do, then that's the asset that you should hold in a way. You know what I mean? Like that's kind of, am I right? I don't know. You know what I mean? Because I could be completely fucking wrong. You know what I mean? That's why I'm saying this is my view, but this is always the way that I like to see it. So yeah, but I do feel, man, like obviously there is a lot of speculation in terms of, is this over? Is this the beginning? I do agree with some things in terms of, I'm not sure if we are going to get the same amount. Here's my two biases, right? In terms of, because I always like to put a counteractive, like a bias that I agree with, and all the data that I do not agree with. You know, so which one has the higher possibility? So let's talk with the first one, which is, we're never going to get the same bull run that we got 2021 or something, right? Okay, what is the hypothesis behind that? There's a valid one. One, we have, we already started, right?
Yeah.
Yeah, we're just talking. Hey guys, what's up? How you doing? All right. So one, there's so many tokens in the market, right? And every single day we keep creating you know, there's new tokens, new projects, there's new stuff, there's new things. So liquidity is running low on that perspective. Back in 2021, right, or 2020, you know, whenever we have, there wasn't many tokens, man. Think about what was happening there. There were many tokens. Crypto was new, right? Technically, anything that launched pumped. Why? Because it's new technology. As simple as that, right? Oh, fucking, I remember one that I got wrecked was the universe. Was it the metaverse? Right?
Metaverse.
Yeah, fuck.
And
I did well in one, but
Anna.
then the bro, like anyway, things like that, right? So obviously all the stuff was happening, and everything. It wasn't many. Anything that launched pumped. As simple as that, right? It was like a bubble. Okay, but now where we are in a more I will say mature market in a way, right? So now you have Bitcoin, Ethereum with ETFs, right? So now you have institutional people, institutional money flowing into crypto. Okay. What's the downside? The downside is that we have so much shit out there in terms of tokens. We have now tokens that are on the exchanges. We're talking about, we have multiple projects, multiple L1s, multiple chains, multiple things doing the same thing. You know what I mean? If you look it up and you have a look at all L2s that are on top of Ethereum, I will say 70% of them, they do the same bloody thing, man. Like they do the same. It's a replication of the same thing over and over again, right? So that's one thing that, that I agree with that perspective. So that's that, right? Also on top of that, you get projects like all the Solana meme coins, all the pump.fund stuff, all those stuff that is actually sucking liquidity out from allowing certain things go to the moon, like 10x, 20x, 30x, like we used to have in the market. Are we gonna have those still? I think so, but they're gonna be too narrow, right? From that perspective. Okay. Now let's analyze the other aspect of it, right? This is gonna be the best bull run ever that existed. Okay. So in my view, or things that I've seen in terms of data supporting that argument, is that now you have institutional money coming through. So you have liquidity, right? Also, you have now Trump backing and supporting DeFi projects. Well, in a way, DeFi projects and coins made in America and taxes and things like that, things that never happened before, right? Like, so it's a brand new sort of a scheme of what could happen in terms of those coins, right? In terms of at least things that have a value into the fintech industry, call it that way, right? Like you have XRP, right? Loving to be the new transfer of money, right, from bank to bank and things like that. That's the whole thing. That's the whole thesis, right? Can that work? Definitely, right? Now that so I'm 50-50 in a way, right? You could see both perspectives anyway, right? So I do think that this time you do have now inflows of capital into crypto. Why? Before, like a couple of years ago, um, uh, these guys, big funds and stuff like that, project like the what are they called? I completely went blank.
Like VCs.
Now the guys that actually manage your portfolio on your investment portfolios and stuff like that, portfolio managers, call it that way, right? And now they're forced to invest at least one portion of the portfolio into a risk asset. Why? Because they cannot actually oversee that, right? They have to. It's like a liability for them not to actually go into Bitcoin a little bit, right? That you depend on. So we didn't have that before, right? We didn't have that before. So there's a lot of things like that happening in the financial world. Things like, now you have stable coins boom, right? You have Circle, all these things launch on NASDAQ that's actually providing liquidity into this stuff, right? You also have now all these companies, real companies, staking, call it staking, right? Buying Bitcoin and putting their books for like assets instead of buying property, or instead of buying property or buying buildings or buying new assets, they buying Bitcoin and Ethereum as an asset, right? As an appreciating asset. So it's a different game. You know what I mean? Like it's a different game, and that's just started probably 6-7 months ago, right? So if we have continuation of that, then I could see a massive bull run. So those are my two hypotheses. You know what I mean? That's kind of what I have in the back of my head. Which one is going to win? I don't know, right? But you need to have both. So you need to track price action, right? So obviously that's what price action gives you a little bit of more insight. So which one of the two hypotheses will sort of win? You know what I mean? Start playing. But I need to be biased at some point, right? Because even though I'm 50-50, as a human being, you're always biased. You have to be, you know what I mean? Like I think, and that's when we get caught up, especially when you're trading. But I'm biased towards the bullish side of things, right? Not everything. I don't think everything is gonna go up, and I'm biased that way. But I do think there's some things definitely are going to give us a good surprise. It's like the same thing that happened back in, in the internet boom, that every single company that was launched on the .com bubble, flourished, but then only a few remain stable, and actually they did pretty well, right? So I that's kind of my take on a sort of great scheme of things, and always, that's why I keep watching the market on a daily basis, because the crypto changes like that, man. It's in one day things could turn from bullish to bearish very quick. As simple as that, right? And that's kind of what I'm looking in terms of price action levels, things like that. If people are not willing to buy at certain levels that I see in terms of the charts, then things start getting iffy. You know what I mean? Like that's kind of the take that I usually take.
Well, that is very interesting.
So someone asked, can you summarize the two hypotheses, please? All right, sure. First hypothesis, right? We're done. Bitcoin is done. Everything is done, right? Based on, right? And here's my hypothesis. Yes, based on the diversification of assets. There's too many assets right now to actually pull all those gains into, a massive bull run that everything goes up. That's take. Or we just starting the bull run right now, and this is actually the place to buy everything, right? And it's based on now institutional money is flowing into Bitcoin, into Ethereum. Now you have companies buying and staking that, so that's going to bring more capital into crypto. So that will allow institutional money to become a little bit more aggressive in risk and actually start betting on alts, which are those projects that could have a potential gains, right? That's it. That's in summary the two.
Interesting. So another thing to get you to talk about will be cycles, because if I was on the call and I was to say 4-year cycle, he'd start abusing me. And so start with cycles, and start with why people cling to cycles, and then why people are so willing to believe that this imaginary cycle is going to extend, is going to end, like it's going to do this, like the 4-year, like you'll read. I mean, this is what makes a market.
Yep,
that everybody's
exactly.
got a different idea, if you know what I mean. But it's like, nope, the 4-year cycle, that is it. This works, that is it. The 4-year cycle's done for. There's never been a 4-year cycle. The 4-year cycle is now a 5-year cycle. Like, you can read anything about cycles, and it's certainly something that, well, I'm not immune from it. I look at Bitcoin, and the first thing I think is, I say, well, I can look at the price action, and there appears to be a cycle here. It appears to repeat the same thing every 4 years, but that doesn't mean that it's going to happen next year.
Exactly. So think about it from the perspective that cycle is just data that is being sort of, things that happen over and over again. Therefore, you cannot actually dictate a cycle in the first cycle, right? Because a cycle doesn't exist, right?
Yeah.
You know what I mean? So think of the perspective that is that theory behind patterns, right? So whenever you have a pattern, right, it's like, there is this pattern that Bitcoin or crypto always does horrible at the beginning of Q3, which is now, like July, August, September, right? It's been a pattern, right? There's many factors affecting that. Is that going to happen this time? Don't know. But always, it's their guidelines, right? It's like price action. Price action also are patterns, right, that keep happening over and over and over again. So I will say it's a guideline, but I will not live by it. You know what I mean? Like, because, and this is, you mentioned something very, very important, is like, and this is just my take as well. This is the more people believe each theory, the more it's likely to happen, because at the end of the day, that's what they're waiting for. That's how they price their assets. That's how they're going to buy or sell based on some, right? Based on that pattern. That's what the patterns exist. You know what I mean? Like, so in my view, they're guidelines. Always have that as a guideline, right? It could happen. It could be the possibility. This is that. And you have to based on, so, you know, why this year is different than the year before, or why, you know, all those values or factors that it could affect every single year to either play out the same cycle or to not play it out. And in 10 years time, you might go back and say, you know what? Every freaking cycle got played out except in 2025 or 2026. And then you keep believing in the same factor, but that's called something bias in your brain that you always tend to look for
You look for the pattern that you want.
Exactly, and not the real pattern that you see. That's why markets are tricky, man. You know what I mean? And but the confirmation. Thank you, Jason. Yeah, confirmation bias. Correct. So that's true. You know what I mean? Like you can actually talk to any trader or anything like that. It's hard to find traders that are actually just very sort of neutral, fucking neutral. You know what I mean? Because you tend to just go back and see what's actually working for you in terms of your confirmation bias. So how do I deal with it? Just fucking guidelines, right? This is my guideline. We have the 4-year cycle, right? So to be aware of, that's another input of data that I need to be aware of, right? That's kind of the way I tend to look at it, right? I'm always right. I'm always perfect. No, man. Like I'm you know, it's tough. It's a tough game, right? Especially when you have money on the line, right? When you have money on the line, you become emotional, and that actually affects a lot, right? So yeah.
Oh yeah, the the emotions are rampant, are they? It's like what did Bitcoin get up to recently? 122. And it's like you imagine all the dinner tables, you know, around the world. So how's the Bitcoin doing? Well,
Correct.
how much have we got left? Well, it's down to about fucking sell it then. You know what I mean? And yeah, but those retail investors coming in is what we you know we really need. All right then. So thinking about what we've said this morning, maybe this is a good time to transition into some of the open interest. So perhaps we could take how we're, you know, all the stuff that we've said about how we're feeling and guidelines and everything, and maybe have a slightly deeper look at the open interest and the kind of factors that you know that you look at.
Yeah, no, let's do and let's do a small deep dive on what I'm seeing at the moment. And there's a good question right here from Kim. So will you be buying more spot to hold on top of the market? And I'm gonna answer that question as I go through what I'm seeing and why I'm buying more. Why? But I could be wrong. So you need to have that you need to have that other side of things that you need to get out. Unfortunately, on a loss if things don't play out the way you basically see things, right? So I'm gonna go through that. And yeah, let's start with that. So do you have anything to see, like anyone's in the market, or anything to like any thoughts on the market right now, Ian, in terms of Bitcoin, Ethereum, and things like that?
Not overly. There's some interesting stuff on the monthly chart about weakening kind of resistances around the sort of 107, but no, I'm still half asleep.
Fair enough, man.
I got bed early.
Let me share my screen now. Let's start with Bitcoin, because we there's a few things that I want to talk about. Probably will be handy. All right, do you guys see my screen?
We can.
All right, so let's start with Bitcoin from the monthly perspective. We just closed the month, right? So this is the monthly perspective of, and this is one of the problems of crypto. A lot of, especially crypto traders, have been biased to think that when they buy, things will go to the moon straight up. And yes, there's there's going to be some trades that are going to be like that, but there's going to be some of them. So obviously you always sort of start with the bigger picture, right? To figure out what's the volatility of that month could look like. So if you think from the monthly perspective, the first thing that I will say is that, by the way, we have talked about this indicator, which is ATR, and the ATR is just the average true range. What is the size of the candles in the in the specific time frame, right? So if we talk about the volatility, right, on the monthly side of things, right, we need usually markets need to cool off, right? The volatility needs to come down in order to have another push. And this, I'm talking about monthly, all right? However, something that we cannot ever predict is how high the volatility will get. You might see patterns, right? That this is the highest volatility we have ever been into since 2021. Would you agree with that statement?
I do.
All right. So that's how you start sort of making your decisions, right? So in terms of price action, okay, I'm just talking about price action. I'm not talking about political stuff, things like wars or you know, conflicts, geopolitical conflicts, stuff like that could definitely affect all this stuff, right? If that didn't exist, then you go into price action. However, more than likely, all those geopolitical stuff and anything that happens, it will get reflected in the price action anyway. This is the appreciation of how people will see any outside factor into the market. As simple as that. So, with that being said, right, we are in a high volatility in a high volatility reading on the monthly side of things. All right, we know that, so definitely we could expect a little bit of cool off, right? And I was saying like that last week, especially if you, and this is if you guys like scalping, which I do like a lot, you have to be, there is this pattern. Again, it's a pattern, it's a cycle, it's a read, whatever, that usually when we have good months, at the end of the month, it's usually a little bit of pull down. You know what I mean? Usually, you see this week it's down, right? That's the end of the month, sort of, and usually happens in the last couple of days, right? So think about it from that perspective. You like scalper, you can take some quick shorts and things like that. But then it's a natural thing of things. Why? Because people take profits. If you have a good month, for instance, here on Feb, right? Then at the end of the month, it was a little bit of a pullback, right? So then you start assessing what do you want to see. So what do I want to see in the monthly in order for things to keep moving towards who knows what price? We are in price discovery also, okay? So first, I want to see price, right? Staying in this area, right? Give it a take. I will say the lowest 108, which is the sort of lowest monthly area around this here. We're still bullish. When we're not bullish, when we actually start coming down from 100 down. So if we don't, if we're not able to sustain the 100,000 level in Bitcoin, then we start seeing a bullish massive trend on the monthly side of things. What I want to see to be bullish is on the monthly, and think about it from the monthly. This is going to play out in about 2, 3, 4, 5, 6, 7 months. I'm not saying that it's going to happen tomorrow, right? Why I see this, why I'm looking at the monthly now, because we just had a close, like on Friday, we had a monthly close, right? And this is the new month developing. So what I want to see is ATR coming down, so average to range, and holding these levels around here, probably, you know, in order to actually have another pull, another leg to the outside. And if we continue this trend, right, because we are in a bullish trend, are you agree in the monthly perspective? Are we like, Is anyone disagree that this is not bullish?
A trend should be obvious to an 8-year-old.
Is this, what do you guys think? Is it without a doubt, right? Obviously. Now we are in a long trend, and so where do we enter? So based on this longer term, that's why I buy spot, right? So a spot is a different game that perps, right? Spot is something that you hold for a couple of months, years, add more into different theses, and you know, read the market, read the main market to see, and hopefully it plays out, right? That's the way it works. So now we go back to the weekly, right? So we just closed the weekly this morning, right? What do you guys see from the weekly perspective? Are we on a bearish range? What are we in on a weekly perspective?
A small range.
Small range, but we're still bullish, right? And so we're still bullish. This is very common. You know what I mean? You have a bullish regime, then it goes into sort of accumulation. Then we have this sort of, this is very common with leverage wipes and things like that. And why? Because a lot of people go nuts on leverage. And then this wicks down right here. That's very telling in terms of, you know, new spot buyers coming along, new liquidity coming along, because some people are ready to profit, then they're looking for a next entry. As simple as that, right? So if I look at that from the weekly perspective now, and if you start looking at the volatility from the weekly perspective, right? Now the starts coming down, right? What is the levels, like, you know, ideal levels that you might see from the liquidity, if from the volatility come down? The only thing that you can rely on is patterns. What it has been the volatility in prior in prior times. So if you look at the volatility, right, the average to range around where things actually went nuts, right? It was around this 6,485. What that means is in the average in the last 14 weeks, right? This is a 14-day, this is the standard 14-day average. In the last 14 weeks, right, the price of a candle has moved around 6,303. That doesn't mean it's going to go up. That doesn't mean it's going to go down. It's only telling you how likely it was the movement, right? That it could move on an average day, or on an average week. Okay, so that's kind of what a good reading will look like, you know, around this area right here. So if we start coming down around here, and then this maintains its range, more than likely, now we start building a possibility that we're going to have continuation to the upside, right? So then we move into the daily, right? And daily, all right? Same deal. So daily now, volatility is actually, all right, what do you guys see here? Give me your thoughts in terms of what do you see in terms of volatility from the daily?
Well, volatility is looking lower than that 6,000 that you showed us before. So volatility is looking pretty stagnant, and you know, close to a place where Scott would say big moves occur in low volatility times.
Exactly. So volatility is being sort of from the daily perspective starts coming down, but bear in mind always, you know, you just mentioned something very important, and is big moves happen when volatility comes down, right? And big moves to either direction.
Either direction.
And that's what we tend to miss. Even myself, you know what I mean? Sometimes I'm too biased to one side that I don't see the other side, right? So if we see an increase in volatility towards the upside, happy days, everything is going to go great, right? But if we start seeing uh, volatility increase, starting to breaking down towards this level, then it's something that we need to be mindful of. You know what I mean? So that's something that you need to start by it putting into your like inputs. I see, for instance, you have your cycle, you have your 4-year cycle or whatever, and then you start seeing some inputs, and then on top of that, how do you want to play it out? You want to play it on a weekly, you want to buy it on a daily, you want to buy. Ideally, what I'm doing in terms with or what we're doing with 100x trades is, you know, getting really good risk reward ratios in terms of what we see, in terms of what the market is doing. So, for instance, with Bitcoin, what we see now is that we came down to this level right here. This, you know, you guys have seen the levels that I draw all the time, and it's funny, every time that it hits that level, something happens on those levels, right? So while I'm watching this level, easy, that's the highest high. This is the breakout, right? This is when we had the high, like this is the highest high in a while, like in. This is the highest high that happened on May 2025. 2025. We just broke that here on July, right? And now usually these are retracement, but it was more than that, because on the small time frames, I was talking about this gap, right? I was talking about this CME gap, which now, right, essentially is being completely filled. Okay. You guys understand what the CME gap is?
The Chicago Mercantile Exchange, is it? That closes
Yes.
at the end?
All right, let me, so the CME gap, you can actually, in TradingView, you can load it up. You go to futures, right? And you go Bitcoin. No, use ET. So CME is just the futures that regular institutions can actually trade. So here's the Chicago Mercantile Exchange, essentially, right? And this is basically futures that regular institutions are able to play. They're pretty like a perpetual contract. It's not buying the assets, it's just doing the same thing as a perpetual contract, but from the institutional perspective side of things. But the difference is, let me load it up. The difference is that this CME got because it's a Chicago exchange, right? It's the central. It closes, right? Crypto doesn't close, but the CME futures does close because the whole market is closed. So what happened on gaps is that on Friday, right, it closed and opens on Monday. And because the price on Bitcoin never stops, right, if that goes over the weekend, right, then it's going to have a huge gap. So usually those gaps get filled. Usually, not always, but usually they do get filled. So this is the gap that I showed you guys last week, that every single trader was looking to get position perhaps on filling the gap, right? And we just filled the gap completely, like yesterday. This is usually very common gap downs. Why? Because a lot of because the market is closed. If people feel that the market, especially institutional traders, feel that the market is going to crash, the S&P 500, so they hedge against it, so they short Bitcoin heavily, right? And that's why sometimes we do have these gaps down, right? Like here, that happened on June, huge gap down, and guess what? The gap gets filled usually. Here's a gap up, it gets filled usually. So that's just gap down right here gets filled. You know what I mean? So it's a pattern. It's another pattern. It's another input. So it's another thing that you could be looking for in terms of trading, right? And guess what? We do have a double gap here that no one is talking about, which happened last week. So we have this huge gap here, and we have another gap here. And this gap on July 28th got filled completely, and now the big gap got filled. Okay, so how how do you guys can use that for trading? Marlon, fair to say gap is a temporary aberration. That's an interesting word, man. Aberration. All right, let me. um, it's an anomaly, call it that way. But it's not an anomaly because at the end of the day, this happened because this market wasn't open. But the interesting thing is the institutions have a lot of power in terms of the money that they like the inflows and money that they hold and think and this CME is a big volume of the market. So what that means is if there is a gap, a lot of institutional traders are willing to fill it. That's it, because they need to fill the orders. So that's what usually happens. So I don't know if it's an aberration, anomaly, call it that way. It's a pattern, I will say that that it will happen. But if you analyze every single gap, right, from the daily perspective, yeah, you'll find interesting things, man. Look at this one here. So this is just a very interesting pattern that always, not always, there is a high chance to play it out, right? There you go. So all right, so coming back to it, what do you guys, how this is useful, knowing this information, how do you think it could be useful? Do you think now, like if you think from this perspective, do you think that Bitcoin is going to keep going down, or you think Bitcoin is going to keep going up? Or what are your thoughts? Okay, that's interesting. Yep. All right, so now we start building a hypothesis based on the patterns that we see, right? So I do agree with some of you. So obviously we are filling the gap. Now depends on how this price moves this week. More than likely, at least we're gonna retest these areas right here. It's fair to say that's could be a thesis that I can think of, right? Would you agree? Now we have data to support that thesis. I'm not saying that this level, this level exists for a reason, and that's why I'm basing my thesis on. Can I be completely wrong and this thing nuke all the way back in 106? Yes, definitely can. But this is a very interesting level of price that if people are looking at the same thing, especially institutions are looking at the same level that I'm looking, more than likely I'm going to be in the right side of the spectrum. If this starts coming down, right? So that's my CME gap that I'm looking. And I'm talking about 6 hours sort of smaller time frame, but you can actually look at this on the hourly if you really want to do like real cool scalps and things like that. So if I'm start seeing this price reclaiming back up, then definitely at least I might say that it might restart retesting the 118. Now, from that perspective, because spent a lot of time analyzing Bitcoin, because obviously if Bitcoin goes up, more than likely alts are going to follow, right? So if that thesis is correct, right, more than likely we're going to see a lot of stuff coming back up. So that's when I load. Oh, let me talk about Ethereum first, right? Let me talk about Ethereum because it's important. Let's talk about Ethereum because I think Ethereum, it is all eyes on Ethereum. I know Bitcoin is important, but Ethereum is actually becomes a little bit more important because if Ethereum starts breaking this area of interest that we drew a while back, then this is going to, like all alts are going to be very interesting, right? Very interesting. So with that being said, what's your thoughts on Ethereum? John, yes, great. Can you put the CME chart next to, all right, let me, are you talking about Bitcoin? All right, let's go back to Ethereum. Yeah. Continue on because we're running out of time. All right. So Ethereum app, Judy, ETH, no opinion. Anyone else? Still bullish. So guess what? Let's do the same analysis. Let's start with the monthly, right? So monthly, where are we at? We are on the verge of a breakout. So that's why you see why this is very important. So we're talking about that from March 2024, this month, 1, 2, 3, 4, 5, probably 6, 7 months we have tried to actually break that area of interest right there. Okay. And Ethereum hasn't been able to. Now, that doesn't mean it's gonna nuke, but it's a matter of interest. So I'm watching these two levels right here. Very important. Why? Because it will start coming down from this level, the 3,200. Probably is going to take a little bit more time to break it. Long term, eventually, I think it's going to break it. When? I don't know. That could happen tomorrow. That's why price action is important. That's why building the bias is important, right? I do believe there is so many stuff happening on Ethereum, on top of Ethereum, right? That is very hard for this not to break, at least to the $5,000, right? But the question is when, right? The question is that it's going to be this week, it's going to be this cycle, right? Or next cycle, or are we going to even have cycles? So that's kind of what we're tracking. But so far, what we see same thing. Average to range, so volatility will be up, right, from the weekly, from the monthly, then we go back to the weekly. What do you guys see now from the weekly perspective? Seem bullish, bearish? Do you think it's overbought, oversold? Some people, yeah, I don't know about the overbought and oversold. The consolidating, yes. Okay. From the weekly, what I see, I see a huge bullish asset, man. Like if you think it from the perspective of what Monday, the April 25 bull as it can get, right? Higher highs, higher lows, which we have a higher low here. So we could have a potential higher low forming here from the weekly perspective. Okay. So that's something that's in my mind. Average range is actually coming down. So same analysis. If this maintains or breaks with this actually coming into a reset, we can actually start seeing some push to the upside, right? Same thing with the daily, right? So daily, so that's why those levels are important there. I want to see the reaction of the price, right, on a daily basis, right, in order for me to continue or cut my positions. As simple as that, right? It's not as simple as that, but it gets draining sometimes. But what I'm seeing here is at this level here, 3,400. I was actually looking at the 3,500 level. It went down a little bit more, but the reaction is quite positive. So I'm biased towards at least, same thing as Bitcoin, at least to retest this area here. But here's another pattern that I always sort of pay attention to, and is where are the areas of the risk? So here's two things that are forming. We have a lower high, and we start seeing, if we have continuation, then we have a very, very bullish asset. Therefore, this is not going to stop at least until it hits 5,000. That could be my view. But if price comes around this area right here and is unable to break, what that means, or what that tells me, is that people that bought here, right, they might just be de-risking again, and more than likely we're going to have another leg down before we start going up. So this is kind of crucial. Why? Because we broke structure, and this is the first time since June 2000, 25, that from the daily perspective, we've broken structure. And what that means is, if you start seeing a trend structure, we have up, and on Friday, right? On Friday, we broke structure, first time. So usually when we break a structure, you know, especially retail, people like us, they say, all right, that's it, we're on, like, let's go all in. But institutions need that liquidity to start getting out of these positions. Okay, so this is a crucial moment. And let me just show you with different patterns that happened before. Same thing here. This happened on November 2024, up, broke structure right here. You see these levels here of structure, but then now starts going up. And then on that high right there, that structure did not sustain. And then it is the start of a bearish sort of regime in a way, call it that way, right? Because a lot of people are taking profits. So that's where we at, okay? That's where we at. So based on that, on the macro level, if I start playing some trades, I need to be cautious of here, of those levels, right? If Ethereum is actually able to reclaim this level out here, right, at 3,600 and sustain, then I'll start open up the risk. The risk is going to be really high, right? For like, not the risk, like the position, like I'm going to start position myself with higher risk because there's a higher likelihood that we're going to get at least 5,000. But if we start rejecting these levels around here, then I start winding down the positions. That's it. You know what I mean? That's kind of where I'm at the moment. So, but the question that you guys asked me at the beginning, are you piling more spot? I'll be cautious of it, right? I want to, but this is the macro stuff that I'm watching. I'll be doing more spot with more confidence once I start breaking about this, right? But in assets that I do really have confidence is you know, because this could actually do something like this. What is this? Completely, right? You know, that could be another point of interest if we start breaking down. That doesn't mean all assets are going to start breaking down. So in assets that I really do have a lot of confidence, such as INA, SUI, Deep, Arrow, I might keep adding, you know, even if we have but on other risk assets, I might be a little bit more cautious, right? Things that are just jumping hugely today or tomorrow, I might be a little bit cautious on that. That's pretty much, you know, in terms of price action. And if we match it up with open interest, right? So with open interest, you can actually go to where is it, CoinGlass. Right here. CoinGlass on liquidations data. So this is something that I definitely monitor, especially on dips, right? Because on Friday, on the 1st of August, we liquidate, like this is the whole market. There was a liquidation of 107 mil, something like that. So it's a huge liquidation event, right? So that's the highest that I ever been from Feb, right? So what does this tell me? That a lot of those positions are clear. So this could be the time to start buying or adding leverage. You know what I mean? When we do have these big liquidations. However, sometimes when we do have liquidations, we need to wait a little bit for the market to cool off. But this is a really good indication that now, you know, leverage is out of the system. So what that tells you is that if we look at ETH, for instance, something that I was tracking at least on Friday, it was the spot buyers, right? And this is an indication of where spot buyers are coming from, at what levels. And we see that we did not have any buying, like no one from the spot, like in the spot are buying, it's buying Ethereum until this morning, kind of, right? So you can actually see that we can start seeing some influx of spot buying right here. And that's what I want to see to have a sustainability of movement. So can this change in about a day? Yes, it can. But if we start getting on higher time frames, a bullish reaction on the CVD cumulative, plus now we have clear pretty much all the leverage, right? And we start seeing leverage opening up again, which, how do you see that? By looking at the open interest coming back up, price moving up and moving up. Those are the three factors that could drive a market towards the breakout. So it looks good. It looks good. However, be mindful of what happened at these levels right here at the 3,800. That's it. That if we break that abruptly, so this thing is gonna drive. So how do I position myself, or how do we can start getting position? We can start getting position with low risk at these areas, because you know if it breaks hard, but if it dumps, it might dump. So you can actually take some profits around this area, move the stop loss, and then happy days if this. So that's kind of a good way of looking at positions. So yeah, that's it.
Amazing. Amazing.
All right. So yeah, that's it, guys. That was an interesting one.
Yeah, that was a really interesting session, man. Nice one. Well, there we go. Let's see what this week has in store for us in the cryptoverse.
I know, the cryptoverse. I'll see you guys tomorrow, and yeah, let's see
Cheers,
what happens tomorrow. Bye bye.